Good morning and good evening, everybody, depending on where you're at in the world. Can you guys see my screen all right?
Yes.
Man, I'm not even up front right now. The coffee just hit. Sheesh. All right, we're gonna have to hold that back for a second because we already started. Um, let's jump in. We're just going to do a quick review. We're going to do a forward outlook heading into next week. Some things that we need to be paying attention to now that this week is primarily over. We've had the announcement from the Federal Reserve, the announcement from the Bank of England. We await the announcement from the Central Bank of Japan later this evening as we roll over into tomorrow's trading session. It has been an extremely accurate week this week for us here at CYPRX. Yet again, gauging market fundamentals correctly, not only in the digital asset space, but also in the FX markets. Hopefully, you guys have been able to track and capitalize on everything that myself on the fundamental side of things and the technical analysis breakdowns. Couple that and paired that with the delta zones that Usman has been giving you guys in the chat to capitalize on phenomenal trade playouts this week. So let's just take a look at that. We're going to start with GBP USD. We'll roll into crypto, and then we will end taking a look into what data to be paying attention to as we roll into the last business week of the month of September, which ends Q3. I've had a phenomenal Q3. I passed a $200,000 challenge after moving to Texas. The account is currently up about $17,000. So in 3 months, that's not too bad. I will be rolling into Q4, looking to only trade October and then probably taking another break November and December, getting ready for the holidays and the elections. And then we will slam the markets yet again as we head into 2025. Maybe we even start to see some significant price appreciation in the digital asset landscape. So there's a lot to look forward to ahead. But let's just talk about this week. Let's cover the accuracy within the community and show you guys, hopefully, that you guys have been paying attention, reading these reports, and staying attentive to these Zoom calls that I deliver to you all. So we're going to go back to the 16th. Obviously, of course, we could go back probably sometime in August where we were talking about this divergence between the central banks, Bank of England, and the Federal Reserve. Primarily, our focus was on the fact that the market was pricing in higher interest rate cuts or a faster pace of cuts or more aggressive cuts from the Federal Reserve and less from the Bank of England. Here is our report from the 16th. You could go back multiple reports ago where we were talking about the same thing, but just looking back at this week, we reiterated this to you guys. And this report reads, on the Bank of England front, they are expected to hold their key interest rates at 5% this Thursday, which now, fast forward to Thursday, they did exactly that. After beginning an easing cycle with a 25 basis point cut in August, futures markets are now pricing in roughly a 38% chance of another quarter point cut this week, up from a 20% chance last Friday. Meanwhile, on the US side, markets are pricing in an aggressive 50 basis point cut after the FOMC meeting last week, with the probability rising to 60%, up from 52% last week, which again we got. So this was yet again another accurate fundamental breakdown. Markets are fully expecting at least a 25 basis point cut. This growing divergence in interest rate expectations is creating more demand for the Great British Pound over the US dollar. Higher rates in the UK for a prolonged period of time make the GBP or the Great British Pound more attractive to investors seeking yield, while expectations of a steeper rate cut in the US make the dollar less appealing for now. Because remember, keep in mind, the data that comes out could change this sentiment. Now, as the gap between the Bank of England's relatively higher rates and the Fed's lower rates widens, investors move capital or shift capital into the Great British Pound, which strengthens the currency. This shift, combined with continued expectations of rate cuts from the Fed, is contributing to the ongoing uptrend in the Great British Pound against the United States dollar. And from that fundamental Zoom call on the 16th, we had called out those buys and that market reversal when everybody else was thinking that the Great British Pound was going to sell off. And we were telling you guys in this call to be a buyer, or at least that I was looking for continued buy moves. Now, here in this report, this is just from the other day, right before the both Bank of England announcement and the Federal Reserve announcement came out. I mentioned to you guys the Bank of England outlook. As for the Bank of England, the market is currently expecting, check this out, this is literally word for word, the market is expecting rates to remain unchanged. A scenario that could strengthen the Great British Pound is if the Bank of England holds rates and adopts a hawkish stance, signaling fewer rate cuts ahead. Word for word, this is the report that we gave to you guys before the rate cuts announced came out. You can see in this breakdown, this is from September 18th, 2024. This is just yesterday to even show more accuracy. At roughly about 20 minutes and 18 seconds, I told you guys that I was looking at discounted buy opportunities, and I drew on some yellow areas of interest at this discounted area, this discounted area, and this discounted area for market pullbacks and buy continuation moves. And moving forward, we can see not only were the fundamentals accurate, where Governor Andrew Bailey mentioned things like rates are on a gradual path, but more evidence is needed. He also mentioned service inflation in the UK is still elevated. These are hawkish comments. This is signaling to the market that the Bank of England, as of right now, is going to have to keep interest rates higher for a prolonged period of time to combat inflation. If we go and we look at all the retail articles that came out just a few hours ago, considering the fact that we gave these fundamental reports well in advance, talking about the tone from the Bank of England, how it would create more demand for the Great British Pound against the dollar, look at what now the rest of the retail herd is catching up to. Great British Pound, Pound Sterling targets multi-year highs on hawkish Bank of England vote split. Why the Bank of England won't diverge from the Fed for too long. Bank of England holds rates steady at 5% by a hawkish 8-1 vote, right? So you guys can see why it's so important that you read these fundamentals, because anybody that did would have been on the right side of the market trajectory or the order flow for the Great British Pound up against the US dollar. Sure enough, yesterday during the Asia session, the market rolled over and we got a nice tap into a discount from where previous market makers were buying from. As I mentioned yesterday, looking at these yellow areas of interest, we can see that the market makers tapped right into that discount from where London session the previous day was buying. And we had a nice impulsive move to the upside, breaking previous market structure highs and tapping into the 1.33100. Right. I called a nice little scalp yesterday during Asia session because I had some alarms go off. I did not catch the bottom of the move, but I did put a nice little buy stop above, well, roughly midway through this bearish candlestick. That buy stop was hit, and I just took profit at these most recent intraday highs. So I called a nice little 1-to-2 to 1-to-3 risk to reward ratio. All right. So just showing you guys that we were tracking this not only this week days in advance, but every single day before the announcement from the central banks, we were giving you guys accurate updates. And then prior to the Bank of England announcement, I mentioned to you guys that I was still bullish and I gave you intraday areas of interest to be buyers from, which proved accurate. All right. So Great British Pound out of the way. Now today, rolling over into the New York session, we actually had some dollar strength pick up. Now this is important because of some of the things that Jerome Powell said yesterday at the FOMC meeting. So today, during the Asia session, the US dollar did turn slightly green with the US data supporting the dollar intraday. And we can see that the US unemployment claims came out lower than previous readings with a decrease of 12,000 from previous week's revised levels. And then we also had the US September manufacturing business survey come out relatively upbeat or slightly higher from previous readings, showing signs of slight economic expansion. All right. Now, these readings, some of them came out mixed, but either way, the employment index rose, suggesting an increase in employment overall. Now, why this is important is because of what Jerome Powell said yesterday. For example, he said, if the economy remains solid, we can dial back pace of rate cuts. Then he also mentioned that policy adjustments will support the labor market. So in yesterday's call, I mentioned to you guys that as GBP USD traders, we need to be mindful of this and not continue to ride the buys and marry a bias, considering the fact that it has been bullish for the past consecutive couple of trading sessions, and that if the sentiment changes hands and the market starts pricing in less rate cuts from the Fed because of upbeat US data, we need to be reactive to that, right? So keep that in mind. We just saw slightly lower unemployment claims, which signals a slightly resilient and robust US labor market. Couple that with some mixed US economic data, still showing signs that the US economy is being and remaining resilient. So looking into next week, On Monday through Friday, we have flash manufacturing PMI. That's going to be a headliner right there. We have GDP figures that will also be a headliner. On Thursday next week, we obviously, of course, have the unemployment claims, some good labor market data to be paying attention to. Final GDP, Fed Chair Jerome Powell speaking. And then we also have on Friday, which will be the primary focus, the core PCE price index, right? So next week, just forward looking, if this data comes out relatively robust, still showing signs of economic strength and resiliency, slightly upbeat labor market figures, or sticky and troublesome inflation, this is going to push back on the aggressive rate cut bets from the Fed. Keep that in mind. That most likely will drive intraday strength to the dollar and weigh on pairs that trade against the dollar, making some pullback scenarios or some profit taking scenarios on euro, gold, and GBP USD. Inversely, obviously, of course, we will continue to play the buys if this data next week comes out weak, showing signs of economic contraction or weakness in any of these figures, higher unemployment claims, weaker GDP figures, or lower inflation readings, because the market would yet again grip on to a more aggressive rate cut cycle for the remainder of this year and as we head into 2025. Moving down the line, yesterday for crypto, we yet again proved more accurate fundamentals and technical analysis, where I said to you guys yesterday at 2:46 p.m., this would be positive. I said lit for crypto, but you know what I mean, where I sent this screenshot to you guys and it signaled some weakness in the Japanese yen. Now we know the Japanese yen strength at the end of July, beginning of August, was a major contributing factor to the depreciation that we saw in the total cryptocurrency market cap, primarily because the Bank of Japan announced an interest rate hike on July 31st, which profoundly unwound the yen carry trade. That created a massive outflow of risk assets and an inflow into the Japanese yen. And I noticed that on just roughly a couple days ago at the beginning of the week, the yen surged back up to that significant psychological level, failed to break it, and started to pull back. And if you go and you look at the total cryptocurrency market cap, it was the same exact time that the crypto market started to increase in value. So I mentioned to you guys that if this price action continued to decline down into these lower demand ranges, we were most likely going to see some nice crypto appreciation. Fast forward to today, you can see this green arrow is where I sent that analysis out to you guys. And we did see a shift of investor capital out of safe haven assets like the yen, where the yen did come down into these lower previous demand ranges. And that created a nice inflow into riskier assets like crypto, where I mentioned to you guys in previous calls, in order to see this continuation move unfold, we needed to create a higher low environment, maintain a risk on optimistic mood in risk assets, which we have, and we needed to start to break above the $2.05 trillion threshold, which we currently have done. To continue this momentum, again, we need to continue to see a risk on market mood, and we need to start to target August highs. Keep in mind that ever since March, the total cryptocurrency market cap has failed to break above a previous month's high and maintain bullish order flow. That means every single month since March, we have created lower lows and lower highs, lower lows and lower highs. So what would solidify a bullish breakout and higher prices in crypto and not a dead cat bounce where this turns into some type of resistance or premium and the market goes lower is if we could break above these August highs at roughly about 2.25 or 2.4 trillion, and we could start to create higher highs and higher lows. That obviously, of course, will wait on further data, as tomorrow we have the Bank of Japan interest rate policy decision, and we will hear from multiple central bankers on their trajectory for the economy and interest rates. All right, their policy decision. Now, one thing I'm paying attention to is the fact that multiple central bank speakers from the Bank of Japan have maintained a hawkish tone, signaling that rate hikes are still on the table if the Japanese economy calls for it. So here you can see this, by the way, you guys can see right here, it mentions improved risk sentiment, right? It says right here, as risk on sentiment pressures safe haven currencies like the yen and the Swiss franc, which is why I told you guys in the chat yesterday to be paying attention to the depreciation of a safe haven asset like the yen for a gains in crypto, which we got. This is exactly why. Now you guys can see days after retail's catching up as always, right? But moving forward, something I'm paying attention to is the prospect of another rate hike from the Bank of Japan, because we know that that will most likely, based off of historical data, weigh on risk assets temporarily. So in this report, it reads, on the Japanese front, the Bank of Japan is expected to keep rates unchanged at the upcoming meeting, which for now is positive for risk assets. However, we need to pay attention to their tone. Does their tone signal rate hikes are still on the table throughout the remainder of this year and as we head into 2025, or do they commit to holding rates at their current levels for a prolonged period of time, which would be more bullish for risk assets, or no further rate hikes on the table? Though it is expected to adjust its quantitative easing policy, which is something else we will be paying attention to. I will write about this in the report today that I released to you guys. The Bank of Japan's last policy meeting triggered market volatility, which is what I just mentioned to you all back on the 31st of July, where the total cryptocurrency market cap tanked from 2.4 all the way down to $1.7 trillion. Bank of Japan Governor Ueda appeared in Parliament and justified the bank's decision, hinting that further hikes are coming if the economy performs as foreseen. The other Bank of Japan members supported his views to continue to tighten monetary policy, with the likes of Takada, Nakagawa, and Tamiru. Dang, I'm pretty sure I nailed those names right there, signaling that further rates are needed if firms increase capex wages and prices. So, with that in mind, we need to be mindful of the data that's set to come out next week on the Japanese front, where we have Bank of Japan core CPI next week on Wednesday, and we have Tokyo CPI next week on Thursday. So, ideally, we would like to see no increase in inflation. We would like to see these readings coming out either at previous readings or below previous readings, or anything below what the market economists forecast next week. This would obviously, of course, maintain the narrative that for the time being, the Bank of Japan is not going to need to hike rates and will support a risk on market mood. So we will be paying attention to this next week as well. Again, just doing a forward look outlook as we head into the last business month of next week. Okay. So all across the board throughout the entirety of pretty much August and September, we have been extremely accurate. I mean, we've been accurate all year, but just showing you guys more recent updates. Hopefully you guys have been tapping in, and hopefully these reports and these Zoom calls that I've been delivering for you guys have been helping out as we head into Q4. Even though I won't be trading November and December, I will still be actively writing out these reports for you guys and doing these Zoom calls. And then we will continue with the momentum as we head into 2025. So outside of that, tomorrow we just have some US data to be paying attention to close off the week. And then we obviously, of course, have the Bank of Japan monetary policy announcement. If they do shock the markets tomorrow and deliver rate hikes, be prepared for some extreme market volatility. Keep in mind that this massive downturn right here was the last interest rate hike decision from the Bank of Japan. Now, you can see here that we saw a nice liquidity grab above highs right when they announced the hike, and then the market tanked roughly about 7 days later. This whole entire downturn took about a week. Okay. So if that unfolds, and we do see a hike tomorrow from the Bank of Japan, which I don't think is going to happen. I think that the market is correct in pricing in that they are going to hold rates. We could see them spike price up into these highs, create a premium area, and then sell off one more time down into $1.5 trillion over the next consecutive couple of days. That is if the Bank of Japan hikes rates. If they don't hike rates, they maintain interest rates the same, but they deliver a more hawkish tone, and the Japanese yen picks up strength, then most likely we are just going to slightly correct some of this most recent bullish move, nothing too significant, as we see some minor inflows out of risk assets and back into safe haven assets. If tomorrow, which will be the best case scenario in my personal opinion for risky assets tomorrow, is if they hold rates but then deliver a dovish tone, signaling no further imminent interest rate hikes from the Bank of Japan, and we create continued bullish momentum, we could see prospects heading into the weekend possibly breaking above this intraday August high, coming in at 2.126 trillion, and see the bullish momentum continue over the weekend for the digital asset landscape, possibly targeting these intraday highs back when they did hike rates at 2.3 trillion. For GBP USD trade ideas, personally, I will be sitting stagnant for the remainder of the week, waiting until next week to trade. And I usually don't trade the last business week of the month. So we'll get into some more trajectory and price predictions as we head into next week, Sunday and Monday, once the market closes and I can see the sentiment and how it was delivered over the weekend. But for now, our overall bias still stands. We're still going to remain in these buy scenarios, continuing to ride the wave to the upside as long as that central bank policy divergence shifts and or maintains in favor of the Bank of England holding rates for a prolonged period of time and the Federal Reserve cutting at a faster pace than the Bank of England, creating more demand for the Great British Pound and less for the dollar. So next week, US data on the forefront to be paying attention to is our primary focus. And then our secondary focus for risk assets and crypto trading will be the Japanese data. All right. Obviously, of course, over the weekend, be mindful of any geopolitical tensions and escalations or black swan events that are out of our control or anything that we can even look at through fundamentals. We know that any escalations or new tensions or war announcements will spark more demand for the safe haven, Swiss franc, gold, and Japanese yen, maybe even the dollar. And we will most likely see an outflow of risk assets if that did unfold intraday. Keep in mind that I've been continuing to tell you guys that when we see these discounted opportunities in crypto, not to be fearful and to take advantage of these discounted opportunities. These past couple of trading sessions have been a prime example of exactly that, right? Anybody that was buying crypto just a couple of trading sessions ago at the beginning of September is now in profit. Instead of being fearful in these market downturns, even if we saw another one, be optimistic and forward looking, understanding that digital assets are the future, right? Outside of that, that's really all I got for you guys. We had a phenomenal week this week. Lots of you guys caught some slammer trades in the chat. Some of you guys were killing crypto intraday trades on leverage. I mean, it's just phenomenal to see the progress in this community. We even had some community members calling out moves left and right. I know Angel called some moves out in the chat. Tim called some moves out in the chat. Angelo called some moves out in the chat. So, phenomenal to see. Who else did we have? We had MC call some moves out in the chat, right? So you guys have been killing it. Any questions of me before we hop off here for the weekend?
You said you were going to go over XLR and your reasoning behind jumping into that.
Yeah, I'll cover that in the report today. I'm gonna do a little bit of a digest, what it is, what XLR, the digital asset is, go over the white paper, drop one of the reports where there's a whole bunch of clickable links for you guys. But just to end this call, yeah. So if we take a look, I'll also drop a video for you guys. As a matter of fact, let's go over to the YouTube real quick. History. Give me a second. Might have went over it. I'll drop it in the chat. I don't know where it's at. It's a video breakdown of an XLR member. His name's James something, and an individual representative, head of DeFi from Ripple, speaking just a couple of months ago about partnerships and the future of the digital asset landscape. And wow, I mean, there's some extremely bullish things and fundamentals that are going to be released on the XLR side of things. They mentioned in that podcast or that panel discussion some partnerships with JP Morgan and Deutsche Bank. I'll let you guys listen to it on your own time. But yeah, long story short, if you just go look at XLR, let's type that in real quick. You can get it, by the way, on Coinbase. I'm looking for assets that I think are going to perform well, that had a nice bullish rally now. Well, at least the assets that I'm currently adding to my portfolio, like Ondo. We already got into soy. Still looking to get into some more arrow, albeit it just had a nice significant pump from roughly around 60 to 56 cents. But looking at XLR, right? If you look at this on the higher time frame on the weekly, okay, we're still in a significantly discounted area compared to the most recent all-time high that was hit back when the markets were extremely optimistic and bullish in March, right? So the all-time high on XLR is roughly around $2.74, and the current price sits at 56 cents. So that's roughly, over 75% discounted. Even if the market saw another significant downturn and this was just a dead cat bounce, I would still buy more. I'm probably going to continue to buy more XLR as long as price is below 70 cents, or at least let's say 70% discounted. So as long as price is below 80 cents, I will be buying XLR or dollar cost averaging in weekly. I just put $5,000 in, so I probably won't buy more for like another week or two, or maybe as we head into October. But yeah, as long as price is below 80 cents, I'll be buying this asset. This is a new one I'm adding to my portfolio. Hope that helps give you a visual.
No, it
All right.
does. Excellent. Have you ever linked up with a guy named Jake Claver?
A lot of people have been asking if I would, but honestly, I started getting into like wanting to interview other influencers and whatnot. And the reason why I don't is because if something ever happens to their reputation, or they say something to their community that falls under, I don't want anybody to look back and be like, oh, CYPRX interviewed him that one time, you know? So I just try to stay away from other content creators and just stay in my own lane. It would be cool to have maybe like an open discussion with him or something like that on a Twitter space, but outside of that, man, I just try to stay in my own lane, not focus on what other people are doing, you know?
Tracking. And I mean, makes sense. I think that you guys had some very similar approaches to the market. He's a lot more, optimistic when it comes to like XRP and price point than you do when you hit the fundamentals and stuff like that. But when he's pushing up on like yield and things like that, and I think when it comes to DeFi and stuff and how you guys have been hitting it, I think might introduce some new opportunities or whatever, especially since he's talking about institutional custody and KYB, KYC, that kind of thing.
Yeah.
That's coming down the pipeline. I think you guys might have an interesting open discussion kind of thing, as you were stating.
Yeah, one of the reasons that him and I have similar perspectives is because he works or does capital management or something like that for family offices, correct?
That is correct.
Yeah, so I have in my network of individuals and people that I talk to pretty much every day, if not every other day, is I have two representatives from a very, very, very wealthy, high-end family office, and we text and talk almost every single day. One of them is a financial advisor, and the other one used to own a bank. And a lot of the perspectives and the insights that I get about the market are from these individuals. So that's why him and I share very similar perspectives, because a lot of the perspectives and the things that I talk about are amongst these people that you guys maybe in the future will be introduced to, but they're very secretive and have a lot of market insights as to what's happening behind the scenes. So yeah. But yeah, he seems like a pretty cool dude, man. He seems straightforward and he doesn't seem like he's trying to mislead people, which is stuff that I like, So maybe in the future. Other than
Copy
that,
all.
hopefully you guys have a good weekend, man. If nothing else, then I'll probably see you guys looking on Sunday, because we'll break down Monday's fundamentals. So we'll do a Sunday prep, we'll do a review, and we'll do a forward outlook as we head into next week in the last business week of September. We freaking killed it this week. So blessings to you guys. You guys take it
Appreciate
easy,
it. Thank you.
as always.
Thanks, Cypress. Have a good weekend.
You too.
Have a good weekend.